the chart right here, and this is your E-mini NASDAQ. It's quite fast. So if you like a slower moving market, I would recommend the RTY, which is the E-mini Russell. It's slightly slower, and yet he still gets, still has a nice pop to it, nice profit potential. So it just depends on, whatever you like. I mean, everybody doesn't think exactly the same. And it's a little lower risk as far as the amount of, not lower risk, a lower account size is needed. So if you have a smaller account, I think the E-mini Russell would be the way to go. The E-mini S&P is probably the most popular or the most traded, but it's just quite choppy. It's not as smooth trending as the RTY or especially the NASDAQ, which is usually the smoothest every day. But here, and you want to always give it the first few minutes when the market opens, because it can be a little crazy. And you say, well, how do I know? Well, you don't want to see long price bars. The shorter the bars and the closer to the red dots, in this case the red dots, the better the trade, the lower the risk, the better the trades. Here, look at all these, here's the dots. And when the market first opens up, I mean, you're way down here. That's a really big gap from the price to the dots. Notice what happened a couple of minutes later? Price went right back to the dot. Bounced off of it, as it usually does, because the dots are resistance, and they block or stop the prices from going any further higher. So if you're going to get into this trade right here, even though it's the first few minutes, just a little trade savvy or common sense sometimes will help. If you see these really long bars, I wouldn't have done anything because of the long bars. It just means it's going to be quite, good chance it's going to be choppy or a little unpredictable. However, there'd be the place to get in. There's your sweet spot. Red bar up right near a red dot, 2-minute buy signal. Sell signal. It's red. 3-minute sell signal. It's red. 1-minute sell signal. The red dot. Well, there'd be the place you'd want to short it. Stop loss always goes on the second higher row of red dots, which would be right there. And then we get 2 greens in a row. You want to put your stop. You could use 1 point. You can use 2 points, whatever you're more comfortable with. Either way, it's basically the same thing. So if you put it a point above the higher of the 2 green bars, you stopped out right there with a 10-point profit to start the day. Okay, sweet spot, red dot, triple confirmation, shorter bar. I like that fact. And then shoots down nicely, but the sell signals don't last very long because the market's obviously in extremely powerful uptrend since last March. It goes up many, many more days than it goes down. So just went down briefly and popped back up again. That's why we got to stop. We moved that stop from up here all the way down here because we're more than 10 points in profit, and we get stopped out there with 10 points. Okay. Next trade would be the triple confirmation buy signal, which is right there. And I like that it broke above the red resistance points here. So it's kind of like we broke through resistance. Now it's like we broke through the clouds. We've got a nice clear path for it to go higher, and that's exactly what it did. So that one worked out nicely. This looks like it is 10 points, but never got stopped out. There's 2 more greens, and we would have been stopped out right about in that area there. So we would have went long at 45, and it would have been stopped out here at about 60. Let's even call it 55. Make the gain even less than it was, because you always got commissions and slippage, and nobody's going to get every one of these trades perfect. Believe me, nobody is. Myself included. It's impossible. The market's moving fast. You just want to pick up the bulk of these trades. I'm just showing you where your entries are, where your exits, where your stops are, and you want to just pick up, most of that. That's the best you can ask for.